Equity investors experienced a rapid decline in the valuations of businesses in the majority of industries in 2022 following the conclusion of a long bull run in 2021. However, we have seen an unassuming bob in 2023. Financial backers keep on being worried about numerous macroeconomic elements that could adversely influencing organizations' financials, remembering the contention for Ukraine, loan fee climbs, and expansion. Albeit the ongoing climate stays testing and questionable, this negative market opinion gives an open door to financial backers to search out stocks that are exchanging at a rebate to their inborn worth. In this article I will feature 3 such underestimated huge cap stocks that I accept are beneficial long-haul speculations at their ongoing valuations. A publicly traded company with a large market capitalization, the sum of all its outstanding shares of stock is referred to as a large cap stock. The company's market capitalization is determined by multiplying its outstanding shares by its current stock price. Companies with a significant market presence, substantial financial resources, and a relatively stable stock price are typically regarded as large cap stocks. Large cap stocks are generally regarded as having a market capitalization of $10 billion or more, although there is no universal definition for the term. Due to the perception that they are more stable and less volatile, large cap stocks typically carry a lower risk than smaller cap stocks. In long-term investment portfolios, they may be considered core holdings due to their dividend history. Broadcom, AVGO, is one of the biggest technology companies in the world. It makes, develops, and sells a lot of software solutions for infrastructure and semiconductors. Its foundation programming arrangements permit clients to design, robotize, make do, and foster applications across cloud, portable, and centralized computer stages. Broadcom's software solutions for managing and protecting on-premise and hybrid cloud environments are used by a number of large Fortune 500 companies and government agencies. After accounting for dividends, Broadcom stock, which has a market capitalization of $265 billion, has returned a staggering 2,530% to shareholders over the past 10 years. AVGO stock offers shareholders a very appealing forward yield of almost 3% despite these enormous gains. Broadcom's adjusted earnings per share rose 23% year-over-year to $10.33 in the first quarter of fiscal 2023, which ended in January. Sales increased by 16% year-over-year to $8.9 billion. In the first quarter, its free cash flow increased by $548 million to $3.93 billion. After making capital expenditures totaling just over $100 million and spending $1.5 billion on share repurchases, Broadcom ended the first quarter with a cash balance of $12.6 billion. Additionally, it paid out a cash dividend to shareholders of $4.60 per share, or $1.92 billion, indicating a payout ratio of less than 50%. In order to boost future cash flows, Broadcom can either increase its dividend payouts or reinvest in organic growth. Over the most recent 12 years, its profits have expanded by 41% every year, which is extraordinary. The price of AVGO stock, which is expected to boost the bottom line by 10% in the next 5 years, is 16.6 times forward earnings. Consensus price target estimates also indicate that it is trading at a discount of 10%. United Rentals, URI, is a rental company for equipment with a $26.2 billion market cap. It gives customers access to forklifts, water pumps, and power tools among other pieces of equipment. Joint Rentals finished 2022 with income of $11.6 billion and a working pay of $3.2 billion, showing an edge of 28%. United Rentals projects sales of $13.7 billion to $14.2 billion over the next year, which indicates that the top line will increase by 18% to 22% year-over-year. United Rentals also has locations in Europe, Australia, and New Zealand in addition to its 1,426 locations in North America. Since April 2013, United Rentals has returned 635% to shareholders thanks to its diverse product portfolio. Sales have gone up by 11%, adjusted EBITDA, earnings before interest, taxes, depreciation, and amortization, has gone up by 12.2%, and adjusted earnings have gone up by 24% annually over this time. The predictable extension of overall revenues has permitted joint rentals to endorse a profit program in 2023. As a result, it declared a quarterly dividend of $1.48 per share, representing a 1.5% forward yield. Given that United Rentals expects to increase earnings by 15.5% over the next 5 years, it is undervalued at 9x forward earnings and 1.8x forward sales. URI stock is expected to rise another 12% in the next year, according to analysts, who remain optimistic. The company Airbnb, ABNB, has revolutionized global travel. Airbnb reported sales of $8.4 billion in the fourth quarter of 2022, a 40% increase from the previous year. Airbnb was able to report GAAP profits for the first time in a full year thanks to this impressive performance. The organization likewise detailed a free income of $3.4 billion, an increment of 49% year-over-year. Despite a weak macroeconomic environment, global travel demand is anticipated to remain robust. Airbnb is well positioned to benefit from multiple secular tailwinds in 2023 and beyond now that lockdown restrictions have ended. Airbnb finished 2022 with 6.6 million worldwide postings, up long-term over year. Security rate increments will likewise permit Airbnb to expand its profit as the organization procures revenue on the sum gathered among appointments and inevitable stays. Interest income was $186 million in 2022, and it could rise to $500 million in the following year. Esteemed at a market cap of $75 billion, ABNB stock is evaluated at 36x forward income and 7.8x forward deals, which could appear to be steep. However, Airbnb's adjusted earnings are anticipated to rise by 21% annually over the next 5 years, according to Wall Street.